Hello, everyone, and welcome to another edition of the Forex Technical Market Update for Wednesday, September 2nd, 2015. And I hope you all are having a wonderful day wherever you are, because we do have indeed a worldwide audience that listens to these updates. So if you're in Australia, or you're in the US, or you're in the Caribbean, or in Europe, good morning, good evening, good afternoon, wherever you may be. Okay, in front of us, we have a chart of the US dollar index. It's always good to look at the US dollar index to see what the dollar is doing across the board or across the different currency pairs. And what we see is that the market bounced off of this 93 level and seems to be rallying to the upside. The market is kind of in no man's land now, but it's rallying to the upside. We have resistance up at 98 in the market and support down in this 93 level. Now, I know most of you say you do not have the US dollar index on your charting package, but it's good to I believe it's available online. You can just search US dollar index and you can see it. You do not need to have a specialized charting package to see it. And I believe some platforms do carry it now. So you can just take a peek at the US dollar index to see what is happening with the US dollar. So we bounce off of that 92, 93 level, and we seem to be heading to the upside. Now, taking a look at the currency pairs, the euro, we did have a breakout above critical resistance in the euro near this 114, 115 area. But the market has pulled back and it's in no man's land also, because this market could still rally to the upside and continue the breakout, or the market could collapse to the downside, trade to the trend line, or even break the trend line and head down further. So the picture in the euro is not as clear as some of the other currency pairs. So resistance is up at this spike high that was made at 117.14, and support, the medium term support now is down at 111.62. The Japanese yen is following the US stock markets. When the US stock markets sell off, the Japanese yen is gaining. When it recovers, the Japanese yen is going down, or we get a green candle here. Because remember, this is USD versus Japanese yen. So when this market is moving down, that means the Japanese yen is strengthening. When it's moving up, that means US dollar is strengthening. So we do have a recovery in the futures of the stock market, and we have a recovery in the USD Japanese yen. Critical support is at 116.22, and resistance is up at the swing high at 121.74. Canadian dollar still in the broader uptrend with the Canadian dollar. This market looks ripe for a pullback because it has been going up for a number of months now. But the strategy for a pullback is to wait for the pullback to occur. My trading philosophy does not allow me to trade these retracements, because I have lost a lot of money trying to pick tops in the markets. I just let the market, if it comes back down, it may come down into a buy area, and we more buy the dips in an uptrend, and that is the essence of trend trading, buying the dips in the uptrend as opposed to trying to pick the tops of these markets. So support in the Canadian dollar is at 130, and resistance is up at 133.53. Taking a look at the British pound, yes, we do have a funny looking head and shoulders pattern where you have shoulder, head, right shoulder. This neckline that the market broke once it broke down below these levels, and this market broke support in this 153 level and is heading to the downside. We have some strong support also at this swing low at 152 in the British pound versus the USD. Okay, so this market is definitely looking, once it broke these support levels, it starts to look very bearish. If we do close below 151.71, that would be very bearish, and we could see a return to 148 or even 146 for the British pound versus USD. Looking at the euro versus the Japanese yen, the euro did not sell off against the Japanese yen as strongly as most of the other currency pairs, but this market is still negatively poised, and we see over the last couple of days the market moving down. Support is down at these swing lows in this 133 region, and a resistance is above the 139 high in the market. And just taking a broad look and broad overall picture, August was a pretty rough month for everyone, even the Forex income system members. August was very choppy. But the key is, and this is the key to successful investing and successful trading, you manage your risk very carefully. So when you have a drawdown, your drawdown is not very large. If you have drawdowns in a region of 60%, 50%, 70%, it's difficult for your portfolio to recover. And even experienced traders have periods of losing trades and have drawdown periods. The trick is, how do you recover from the drawdown periods? If you are if after a couple losing trades you are down 60-70%, it's very, very difficult for you to come back from a scenario. But if you are down 8%, 7%, 9%, 10%, it's very easy to come out of a drawdown scenario. And then when your equity curves hit new highs, you will definitely be in for the good. And this is how portfolios are supposed to perform. It's supposed to go up, pull back, up, pull back, up, pull back, up, pull back, up. Portfolios just do not go up in a straight line like that. That is definitely not in any realistic scenario. That is not how the market and your portfolio would function. You'll have highs, you'll have times when it's stagnating, and we're talking about your equity curve. So if you have a 10,000 account, okay, let's say it goes down to 9,500, even 9,300, it goes up to 10,300, pulls back 10,200, goes up to 11,000, pull back to 10.8, goes up maybe to 12,000. So that is how your portfolio is supposed to perform, and that's what is done in the real world. I know there are a lot of Forex folks out there that are telling you what happens in fantasy land and in their own minds, but this is real world investing. And that's why I say the Forex market is not a get rich quick scheme. And I know from looking at some of the emails I receive, I know some people still think it's a get rich quick scheme. But if you think it's a get rich quick scheme, you will probably just end up losing your money, because you'll be essentially gambling. Now, if the Forex income system signals are for folks who want to see long-term growth in their accounts. So if you would like to have that, you can click on the link below this video to get started. I have been receiving numerous questions about the program over the last couple of days, and yes, it's a mirror trader program that the trades are mirrored from the master account into your account, and the platform that we use is the MetaTrader platform. If you do not have an account with the MetaTrader platform, just get one. It's very simple. Any account you can sign up within 15-20 minutes. I mean, just get a MetaTrader account and get the ball rolling, because I can assure you, September, it's the most we're coming up on the third of the market where it's the busiest, and the trends normally, you normally see some very good trends, and now is a good time to get involved. So click on the link below for more information, and I will see you again. Thank you.